Welcome to Intermediate Accounting. In this video, we're going to go through preparing the financial statements. But before we do that, let's review the accounting process. Step 1, record the journal entry. Step 2, post to ledger accounts. Step 3, prepare the trial balance. And step 4, prepare the financial statements. Let's review this in just a little more detail. Every time there's a business transaction, we begin by recording the journal entry to capture that transaction. Next, that journal entry gets posted to the appropriate ledger accounts. Remember, the journal entry shows the changes to specific accounts. As the accounting period goes on, many transactions take place and are recorded and are posted to the ledger accounts. At the end of the period, those ending balances in each ledger account goes to the trial balance. So the trial balance is a list of all balance sheet, income statement, and the dividends account. There's the ending balances at the end of the accounting period. All the work that we do in financial accounting is with a focus on preparing those financial statements. If we're doing so for a publicly traded company, then investors around the globe are waiting for those financial statements. Let's keep in mind the importance of these financial statements, particularly for publicly traded companies, and how important it is to get all of the numbers correct to accurately represent the performance and financial position of a company. We're focusing on 3 of the 4 financial statements. We are not taking a look at the statement of cash flows at this point. Instead, we're focusing on the income statement, the statement of retained earnings, and the balance sheet. Let's start with the income statement. At this point, we're only looking at the single step income statement. That's where all of the revenues are reported at the top of the income statement. So if a company has multiple types of revenue, sales revenue, service revenue, rent revenue, those are listed one by one at the top of the income statement. Immediately below the total revenue comes all of each and every expense account. And there's one total that's shown, and that total is for net income. As you see here, we are taking if you look at what's highlighted in red here, is a trial balance, an adjusted trial balance. So this includes all adjusting entries. If you see what's here in red, we're taking all of this service revenue, all of these expenses, and we're shifting them into the income statement. Revenue less each of the expenses gives you your total for net income. All revenue and expense accounts and balances are taken directly from the trial balance. Let's move on to the statement of retained earnings. Remember, 4 lines: beginning retained earnings plus net income minus dividends equals ending retained earnings. The retained earnings balance that we see on a trial balance is reported, of course, on the statement of retained earnings. But here's a question. The retained earnings balance that's shown on that trial balance that we know will be used on that statement of retained earnings, where does it go on that statement of retained earnings? Is it the beginning retained earnings balance? Is it the net income that's added to the beginning retained earnings? Or is it the ending retained earnings balance? So here is a trial balance. We see the retained earnings amount in this case, in this example here, this trial balance, it's $8,200. Where would that go on their statement of retained earnings? A, beginning, B, net income, or C, ending? The answer is A. That number that we see on the trial balance, although everything else is an ending balance for the period, that retained earnings number is our beginning retained earnings that we will see on the statement of retained earnings. So if we see the statement of retained earnings here, it's coming off of the income statement of the adjusted trial balance, and if you follow the blue line, it becomes the beginning retained earnings number on the statement of retained earnings. So how do we get to that ending amount of retained earnings? And when will that go on to the trial balance? We'll see that in our next video. Now on to the balance sheet. The balance sheet amounts come directly from the trial balance. The trial balance is going to list our balance sheet accounts in their proper order, so we can just shift those amounts into the asset section, the liabilities, and the stockholders' equity sections. A balance sheet can be either unclassified or classified. An unclassified balance sheet does not show a total for current assets or long-term assets, nor does it show the total for current liabilities or long-term liabilities. It still presents each asset and liability in its order of liquidity. Here's an example of an unclassified balance sheet. A classified balance sheet separately classifies current assets and puts a subtotal for total current assets, and then it separately identifies what are the long-term assets. It may or may not have a subtotal for long-term assets, but we will always show a total for total assets. So if the subtotal for long-term assets is not given, we can easily calculate that between the difference between total assets and total current assets. And the same goes for current liabilities. Here's what a classified balance sheet would look like. We can see here there's a subtotal for total current assets, and then we're given the total for total assets. We see a subtotal for total current liabilities and a total for total liabilities. Hope you enjoyed this video. In our next video, we're going to work through an example of preparing income statement, statement of retained earnings, and a balance sheet directly from a trial balance.